Test, test, test. Okay, my audio's good. You guys talk, 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 talk.
Hello.
All right. For those in the audience, can you? How does their sound? Do they sound okay?
I think
Are we good?
Yeah.
Okay, cool.
Gucci.
All right. So introduction. This is installation number 4 of the Crypto Market Power Hour. I guess it's just Market Power Hour because we don't talk about just crypto. But today, this is on my stream. Obviously, next 2 weeks will be on Jack's. On the panel, we have myself, Bitcoin Schmitcoin. We got Crypto Jack Live, or Crypto Jack. And then we got Carpe Noctem, also known as America's Sweetheart, Josh Olszewicz. Yeah, I guess we don't really need to do an actual introduction. We can get right into it. Unless you guys have any announcements or anything you want to make.
No, I mean, everybody knows who we are, right?
Yeah, if you don't, then why are you here?
Yeah, exactly. Josh, are you going to tell them about your new OnlyFans or no? Okay.
No, we can talk about the Ledger stuff for a second because I think people are asking me about it.
Sure.
Besides you.
Yeah, go ahead.
And I was saying what I generally tell everybody is, look, I've never really liked Ledger from the beginning. I just didn't like the UI. That really wasn't like a security concern. But the other issue with adding a bunch of coins, which is great if you're a multi-coiner, let's say, and you want a hardware wallet because people tell you to get a hardware wallet for all these coins. And one of the best ways to do that is to get a ledger because they have a lot of different coins on the hardware wallet, right? That in and of itself opens them up to potential issues because they constantly have to update and, just think of like the security attack surface where they have to worry about all these other chains now, all these other problems and issues, et cetera, et cetera, et cetera. So you've got that, which it is what it is. It's just part of the game, right? But the other day they implemented this upgrade firmware change where essentially you are flashing your keys online, your private keys. I don't fully understand who said this was a good idea. I can understand where they're coming from, where they're like, look, one of the biggest complaints from people is if they lose their hardware wallet, if they lose their private key, it's over. Like they can't get it back, right? You've seen articles, everybody's seen articles about private keys being lost or stolen, or some guys digging up some landfill, right? Like,
Yeah.
we've all seen that.
Right.
Like I get where they're coming from, but at the end of the day, if the trade-offs aren't worth the risk, which for many it's not worth it, because at the end of the day, there's a very likely small chance that it does get compromised, your private keys. This is like a split system where you're Horcruxing, for the Harry Potter people. You're splitting up your private keys, right? That's the idea. So on paper, it sounds okay, it makes sense. But then when you introduce like, okay, what could go wrong here? Well, they've already had issues with user data in the past as far as being able to handle, what was it? Like shipping orders and addresses and names of people.
Yeah.
Like, I'm sure I'm on that list. I'm sure my address is on that list.
Yeah. Same.
That's an issue, and it's a shame because we're coming off of exchange after exchange blowing up and people pushing hardware wallets on people. Ledger became a massive winner out of all that because of this sentiment shift, right? Or just people getting better knowledge on what they should be doing. Anyway, so the long and the short of it is, yes, it's a risk. For most people, it's probably okay. But for the hardcore people, like there's no chance that they're gonna use this. And the other thing that Jack brings up, which of course everybody's thinking about, is what if the government one day says, this stuff's illegal? Not even the US government. What if like a government in Turkey says, okay, we're confiscating all the crypto? Like, do they go to Ledger and say, look, we want all these hard private keys? I don't know. They're a French company, but there's this whole rabbit hole you can go down as far as like, what are the possibilities here? What is the worst case scenario? What is the most likely scenario? It is just not something that most people want to have to think about or deal with when they have a hardware wallet. So anyway,
All right. So few questions. I'm sure people in the chat probably have these questions in their mind. When you say that private keys are essentially are they being stored in a centralized repository, or are they like what is the actual mechanism that's taking place there?
So I believe the mechanism is the private key is split into 3 pieces, and each piece is sent to a different physical company around the world. I don't know the exact details. I don't know if they shared that. If the companies are in different countries or if they're all in the US, whatever. But the whole idea is like if I make an air gapped private key, I don't want that online in any way, shape, or form, right?
Right.
Hence
Like-
the air gap.
Right. Like this introduces a whole security risk from just interfacing with the internet as far as, okay, this is my credit card number, right? Like that's effectively what you're doing.
No, it's even
not
worse
your
than
credit
that.
card number. It's your hardware. It's your private keys.
It's your
right?
wealth.
It's worse than the credit card. It's like having
like
your
your bank account.
your bank
Your
account
bank account.
routing and account number and everything else associated with your identity that could withdraw your, because at least with credit cards, there's third party risk that gets absorbed. With your hardware wallet, you absorb the risk completely.
Yeah. And you probably see it too, chat, but I put up this is a screenshot of a tweet from late 2022. And this is where they're like, yeah, your private keys never leave. It's the same thing as like a credit card or a passport. Everything stays put. And that's just completely out the window now.
I'm just curious obviously this is completely antithetical to the whole idea of having an off exchange wallet of any kind. It's that you have central ownership of the keys. So is this something that's when you have your hardware wallet, right? You set it up and all this stuff. Is this something that's going into effect for new hardware wallets, or could something from like say 2015, you have a hardware wallet that's already been established, you haven't messed with, are those potentially exposed to this?
Well,
Go ahead.
and Josh, you can probably chime in better than me, but what people are worried about is that so there's a firmware update. This is what I'm showing on the screen here, and this is when things kind of got kicked off. But it says, like, the wording here is starting today, you can subscribe to Ledger Recover, right? So you pay, it's like $10 a month or something like that. So the question then is like, okay, well, like, let's just start with the fact that we didn't even know this was possible, like within the engineering abilities of what the Ledger is. So let's just start there. And then number 2, how long has it been possible in the past, but you just didn't talk about it? And there's no answers to these questions. I mean, it's a deep, scary rabbit hole.
Interesting. Okay.
Do you agree, Josh?
Yeah, I mean, there's all sorts of like what ifs and when.
Yeah.
Not so fast. Twitter account guy, shitcoiner. He put together a thread that I read most of that I think comes to the similar conclusions. I think most people looking at this are like, what the hell are they doing? But again, like the average retail person, it's probably fine. Like it's probably going to be not an issue. I don't want to cancel Ledger over this. It's just not a good security decision for most people who are all in, right? It just isn't.
But it does. Anytime you add a feature like this, it opens up the possibility of an exploit to enter into the equation. And I could easily see someone that's like, so I briefly saw Ledger's, kind of shitheaded commentary where they were like, it's not our responsibility to make things. Essentially, they were like, if your mom, it's like the mom or grandma test. It's like if your grandma can use it, it's a decent UI. They were saying it's not our responsibility to make sure your mom and grandma are safe. Something to that effect. And I could easily see some sort of phishing attack taking place, or someone who is less aware of proper protocols for securing their seed phrases or whatever, having that being exposed if they know that there's a recover element to it now. Because up until now, the school of thought has been that's not an option. There's like, if you receive an email from Ledger saying anything regarding recovery, that's fake. But now the fact that is an option, that just enters into this whole equation like a lot of a lot of unknowns for people to just exploit, people who don't really understand exactly even what a hardware wallet is in the first place. They just think they're trying to be extra safe. What is that?
So this is from Ledger's website itself. This is support.ledger.com. But this was something a lot of people on Twitter were pointing out. They're like, okay, well, what if I deep faked my way into your wallet or Josh's wallet? What is Ledger going to do, right? Because it's them handing the access pass, granting access to whoever this bad person is. And if they get in and get all your, hard-earned Bitcoin or whatever, don't worry, we'll give you $50,000. Like, we got you. So this is the insurance policy.
In that case,
right? It's like, I mean, that's not terrible if you're retail, just kind of meme trading a little bit. But if you've got like your serious wealth, which I know a lot of Bitcoiners who have like OG Bitcoin money behind ledgers, and they're taking a hammer to all their hardware wallets now.
Yeah, I can see where like they're thinking, let's make this a SaaS thing and like give people insurance, and like I can see where they're coming from. It just is a terrible idea. It's a terrible idea. I don't care how it's done. I agree with everything everybody's saying. It is a massive security loophole to get in. People who may or may not even realize like what a disaster this is.
So next question here is like, I haven't really explored what the actual, what is it, Ledger Recover or whatever the hell their little product name is. What is it? So it looks like it says there's some sort of ID verification.
Right.
In a day and age where everyone's can deep fake really, really well.
That was my point too. Yeah.
What is that? What is their process like? They just, you take a picture of your face and you move side to side and you do the typical face scan type stuff, or like, what is it?
I saw something. It was like a video, like a 360 video or something like that. But I mean, we have like, there's been whole threads on OnlyFans models getting replaced by AI generated stuff. You know what I mean? Like, we're not that far away from some kind of deep fake video. I don't know. I'm with Josh. Like, I can see how in a controlled boardroom setting, someone would be like, what would be nice is if you could, like, I get it. Like, I see how that conversation kind of comes up, and well, they probably mean well. Like, damn, I know. Just the other day, old grandma lost, $100,000. Remember that court case we had to deal with? Like, yeah. So I see how like what they're talking about, but how they make that jump to, okay, so without letting people know, let's privately store everybody's seed phrases and then let them know if they want to, get access to it again, just pony up $10 and we're good. I don't know, man. But why not have a specific product for that and then do all those games with just that one new, completely isolated deal? I don't know.
But that begs a question because, right, like someone in chat said, it feels like you paid for a feature, you paid for a system with a list of features, and then you come to find out those features were never what they were promising. So
right.
What are these other, like, how is this possible that
this is another part of this whole problem is that Ledger is closed source versus open source on some of these other hardware wallets where you can see what's actually under the hood.
Right.
And that's another part of this issue is like people don't know what they don't know as far as what's going on because it's closed source. So there could be all sorts of stuff under there that could be problematic.
This seems very, not to get like conspiratorial, but it seems like how like pharmacy companies they'll play this game where they're like, we know that this is going to kill X number of people, but we know in the long run it'll yield this much profit. I wonder if they're playing this kind of game where they say, we know that this will expose X number of people to risk, but in the long run, because it's easier to use and people have this like peace of mind, I can recover my thing, they'll yield that much more profit in the long run. So they're like playing this, this shell game of, we know that some people will get taken out by this, we just don't know what that will be, and they're just willing to take the risk. Like that's kind of what it feels like to me.
They pivoted into NFTs real hard not too long ago. They made this kind of, it almost looks like a small notepad. And it was like you could show your NFT that's in your ledger on the front of it. I don't know. It's like this whole thing. But like, so I agree. It seems like they're kind of going that way with it.
Yeah, I don't know. Very
Weird.
interesting stuff. And you guys
So
have
yeah,
any other?
your options as a shit coiner, I don't really know of great like trusted options because there are a ton of hardware wallets, but I don't really trust any of them. Trezor is like the top of the list. Cold
Mhm.
Card, Jade from Blockstream, but these are all like Bitcoin specific wallets. So I can't point to like a single altcoin hardware wallet that I would trust other than previously Ledger, because you sort of had to. I don't think there's like many other options that for most people,
Yeah,
Yeah.
and the sketchy thing about shitcoins too is that like, man, liquidity is always an issue with those things anyway. And so I'm just thinking about like you trying to liquidate any sort of like, because these shitcoins always have like some news that blows them up, right? Like there's always something that like crushes them. So I'm just trying to imagine this situation where you have a bunch of just like random altcoins on a hardware wallet, and you're having to trust it, and you're like, now there's just an extra step for you to. I don't know. It seems like a weird trade off. You're like, okay, I want to have this security, but also now I'm gonna have to put it back on an exchange, and I don't know. It introduces a lot of uncertainty into the equation. It's not a good time to be a shitcoiner, I guess.
No.
I just think it's unfortunate for them because they were doing seemingly the right things up until this point, But anyway,
Here's I'm going to link this in the chat. By the way, this is Not So Fast's thread, and you're right, Josh. This was a really good one. I did see this one as well. And the bonus to this one is he goes through the Ledger space. I was not there. I just saw the cliff notes from other people, and so there's stuff in there that he talks about that is mentioned in spaces, like the $10 a month or whatever. So anyway, this is a pretty good thread too. If people want to learn more.
Yeah,
Cool.
it's you can't justify the risks. There is what it comes down to for me.
Nah, yeah, no shot.
Okay, so
let's talk about some charts. Huh?
yeah, let's talk about some
Yeah.
charts. Sorry to bum you guys out. Everything's fine. Jack, you go first.
We're good. Yeah. That's fine.
Yeah, well, all of a sudden it's like Coinbase looking pretty spicy as far as a decent place to move, even Kraken, any US exchange.
Right.
If you have to, right? Like, I don't know. You just have to be hip to it, hip with the latest security issues. Anyway, go ahead.
which is
Sit.
a pretty big barrier to entry because most people don't have the time to do that.
Yeah, and let's be honest, like most people don't have a hardware wallet anyway. Maybe they
Yeah.
did after everything blew up last year, but in general, most people think they can't move, or they don't know that they can move coins, right? Like,
Yeah, they think
don't
of it
know.
like as like
a bank,
a Merrill Lynch or whatever.
Yeah,
Right.
it's a brokerage account or whatever.
Sure. All right. Well, I'll kick things off. So we got 40 minutes or so. And it'll only take me 1 minute to tell you that we've been going 90 degrees to the right for 61 days, completely sideways. We're range bound between, call it $27,000 and $30,000. So we have a $3,000 range for over 2 months now. Yeah, makes you want to just eat, I don't know, something bad. I'm like
Spicy meatballs.
trying to not say bad things. So yeah, I don't love it. It's not really a range to me. It started off as one
What do you
potentially.
mean it's not a range?
Well, it's range bound,
What
right?
do you
but
mean?
But there's, like the failure to either stop at say a midline. Hold on, let me put on a midline here.
You mean like cleanly respected upper and lower
Yeah,
boundaries?
like a clean, easy to trade kind of range. Okay,
Yeah.
what's going on? Okay, what's going on? Okay, now kind of, but after all, okay. So I to me, I'm bleeding that away. I don't really like it. The only thing that really kind of makes sense to me is just a clean horizontal slash the head and shoulders, the kind of somewhat slanted head and shoulders that we talked about, last time. And for those of you who don't know, we just throw a quick visual up. A lot of visual learners. Where are you? Hello?
That's me. I'm so visual
Head and shoulders,
it
thank you.
hurts. That's why charting is like breathing to me. Like,
Same.
Yeah, right. Okay, so head and shoulders, pretty good argument to be made that, hey, we have broken down or we are in the process of breaking down. Follow-up argument, perhaps we've broken down and now we have retested the highs for continuation. So all fair takes, but I just don't know that the market's really ready to make a move. I know on the lower time frame, let me pull, do I have it here? Yeah. On the lower time frame, it's been kind of interesting to me because not only have we've gone down roughly 5% in 2 days. And then there was this sort of parabolic feature to the downtrend. I happen to notice on, say, like the 5-minute candles, that kind of thing, that there's these big volume swells to the downside. And then as we made this low, which would have stopped out anybody with a long for a hell of a long time back, like going back to what is this, May 12th? So Friday the 12th, about a week ago. Anybody who had a long all through this got stopped out. And now we're starting to see a reprieve. So it's very interesting to me what's going on. We were talking about this a little bit earlier. I was bored and took a long on the breakdown of this range because I liked what I was seeing on the higher time frame from these big impulsive sells, the swelling of selling coming in, and then this sort of like nice little box, this little trade range on the low time frame, and then running the lows. So, whatever, it looks good for some sort of rally. But on the higher time frame, like, can I look at the daily and make a case for literally anything? No, I can't. So I know, like, this is the time, if I was on a stream or something, I would switch over and I'd go through Bollinger Band, I'd go through Ichimoku and that kind of stuff. But I'm going to let you guys do that because I think you guys would do a better job of it, to be honest. So I'll pass the torch.
All right, Joshua.
Sure. Let's talk about some things, shall we? I think we can probably start with the Head and Shoulders because that's what I think not everybody was watching, but they were watching it more once it actually played out. To be clear, it's not like textbook. It's not equally higher highs or equally lower high on each side of this. Volume's all over the place. Like, you want to see volume declining, but at the end of the day, it's, to me, close enough. And depending on how you want to draw the neckline, you can say, well, we're either at the neckline or attempting to return to the neckline. I just can't see any of this and get near-term bullish because these patterns are reversal patterns. Just like patterns at the bottom. This was a reversal pattern here, right? This was a mini reversal pattern here. I just can't trade it otherwise. So in the moment right now, my expectation is further downside. Something you mentioned, I think on Twitter or one of your streams, and a lot of people caught as well, is that we've had 8 days of negative decline, or 8 days of consecutive decline.
Yeah.
That's extremely rare, even though the magnitude of it is like, what, 10% or something. Last time we saw that was Luna in 2022. Time before that was when Gox exploded in 2014. And the time before that was like 2011.
Really?
So it doesn't happen ever, really. Like four or five times since 2008, whatever, back when we had trading history. So that is not a healthy sign of people that are like, yeah, let's, like, a healthy sign of anybody in the market. To me, this whole like range has been either forced buyers or forced sellers or sellers. Like, there hasn't been this equilibrium of people on both sides. It's just, to me, like, everybody's selling today, everybody's buying today, or everybody's selling this week. Great. But that's not a sign of like a healthy market, in my opinion.
Chop.
That's how it's felt like since the beginning of the year. Like, if you look at the big moves, it's either just like up only, or death is at your door. There's been really no in between.
You had to fade every move. We finally break down, you got to fade it up. We finally break up, you got to fade it back down. It's just like a whipsaw.
Yes, it is not a clean trend, for sure. The other thing that's problematic here, probably the most problematic in the moment right now, this can recover just as the Head and Shoulders reversal breakdown can recover if we're above 30K. We're getting a cloud signal here that's a bearish TK across above the cloud, just as we did in December, January, whatever this was, but we're getting a chart pattern with cloud stuff, let's say, that's telling you, hey, be careful up here. This is a bearish TK cross. This is an attempt likely at a move through the cloud. Now, if we look back, like since 2021, there have been 1, 2, 3, 4, 5, 6, 7, 8 attempts similarly, and let's say 6 of 8 have had at least a decent move. 5 of 8 have made it all the way. And I'm talking edge to edge. I'm just talking, literally from one side of the cloud to the other. So, like in 2022, when we were turbo bearish, these failed over and over, right? We had FTX blow up here. We had, I don't even know what happened in August 2022. I don't know if this was this ETH related? Maybe not. Anyway, point is, when we're turbo bearish, these don't work out. So if we're actually turbo bullish and this doesn't work out, this recovers, like, great. But, again, I can't assume it's going to be fine when there's a 20% downside potential here.
Mm-hmm.
So there's really, I don't see anything specifically that I could point to that's like, yeah, we're going to be so bullish here. It's a series of becoming less and less bearish, but right now it's just full bear as far as the eye can see from a Bitcoin chart perspective. You've got the chart pattern in the cloud. You've got this pitchfork where we gave up the midline the other day. This was May 7th. Anytime you're in a trend channel, and we are mean reverting and then some, and we only did that one other time, and it was, deep, right? This is the SVB weekend where everything blew up. I can't just stay as bullish as I was previously, right? We're still like long term, totally fine. Like this could recover, this could figure itself out. I'm not saying like we won't hit 33K by July, but but in the moment, yeah, it just doesn't look good, and this could also just keep chopping for 3-6 months. Totally fine. I've said basically it can go up or down a few different ways, but ultimately, to me, this is down. This measures to like 20 or 25. And one other thing you can watch for on the near term is that's funny. There's this other like wave chart pattern, I guess you'd call it.
The harmonic thing?
ABCD.
Oh, yeah.
I'm not like an expert on these either, but
Elliott wave stuff.
I guess it's Elliott wave.
He died poor, chat.
He did, but again, like to me, these ABCDs, we know where this resolved, this same spot, right? 24, however you want to measure that. Now, where this gets less bearish, right, is if all of a sudden we start making higher highs again, like, okay, now we're back in the chop, the wash, the garbage. I just don't feel confident in anything until we're way up here or we're way down here. Like all this here is just like gross nonsense. So I don't feel great about decent direction one way or the other here, other than it's probably bearish.
What does
go
Sorry,
ahead.
go ahead.
No, go ahead.
What does your weekly cloud look like on your doubled settings?
Weekly cloud doubled settings.
You mean the proper settings?
Oof.
I mean, Josh's patented.
Yeah, that's what I said.
So we almost hit that Kijun, huh? I can't tell.
Almost. Yeah, we almost hit it. It was at like 32. I think we talked about this 2 weeks ago, I feel like, where it's like the risk reward here of being near the Kijun isn't as good as it was.
Right, yeah.
When SVB blew up, basically. So for me, the next like big trade, if we do or don't hit the daily E to E, the edge to edge, whatever, like who cares? But the next big trade would be this edge to edge, right? And that's not until like maybe Q4. Like it could take a long time. So we could just chop to death. Maybe the Fed brings rates down. Maybe inflation comes all the way down on CPI. Maybe we go into a recession. Like, I don't know. There's all different paths we can think about to like the macro side of things. But this is the next what, White Whale? What's the Moby Dick reference? Like this is a huge trade, you know?
Mhm.
Like that's it's a 50% move potentially on the weekly, and the hit rate of those is probably 100%. Like if we go all the way back, I'd have to go on.
Man, the 2019 is just perfect. Look at that. It's like identical. Sorry.
Yeah,
No,
not a
no, you're
huge
good.
sample size, but definitely high strike rate for what it does.
Yeah, not a huge sample size, but every
3 for
time
3 potentially.
1, 2, these are a mess, but this one for sure.
Dude,
I mean,
that was
this one.
humongous one.
This
Yeah.
one put me on the map, put Cloud on the map, put everything on the map. But yeah, I mean, we can go all the way back on the weekly, and you can see like these look pretty high hit rate. So even the goal is to survive this nonsense to get to
Right.
the promised land, right? To get to whatever. Like, so go touch grass, don't blow up over nonsense. That sort of thing.
Yeah.
Stick to the plan. DCA, whatever you want to do. But
man.
the whole market maker issue as well. Like, so we have regulatory issues with which exchanges are going to be here in the US. Is the SEC going to go after all of them? Altcoins, I think, are on top of this ledger issue, just going to be targeted one by one on every exchange if they're in the US. I mean, the amount of exchanges we have now versus 2 years ago, for example, is insane compared to just we're seeing a general decline in liquidity is my point across the board, right? You can say it was always Binance all the time, always anyway, who cares? But even Binance is seeing crazy declines in liquidity.
Yeah, it's hard to tell like how much of that is a result of, I mean, just as markets go on and they stop making higher highs or whatever, like volume and liquidity tends to dry up as is. So when you combine that with also artificially inflated prior liquidity, it's like it's going to show a huge drop off, I would imagine, just by the nature of the market too.
We also have banking issues, so people can't get money into crypto, right? So from an on-ramp, off-ramp perspective, you're getting hit from liquidity on that side too. So it's just not, it's a difficult time to expect like crazy moves right now, I think, for that reason. Like, even if you wanted to buy crypto, I think it'd be hard. Like, it takes some work to do that, Like, maybe you're buying Bitcoin on Cash App and then you're moving it to some exchange. I don't know, but
yeah,
that takes work.
Whatever happened to PayPal? Wasn't PayPal going to start having crypto on ramping? I mean, do you remember them talking about doing that like 3 years ago?
I thought they announced Venmo, right?
They brought like 5. There was like 5 things you could send, but it was all like internal. You couldn't actually send, a Litecoin or whatever. It was like the value of Litecoin based
like
on
Litecoin
today.
exposure. Rather than
I think that's what it was. Somebody fact check me on that, but I think it was something like that.
2 other things I'll hit on real quick is the Dixie broke up. So all these hopes of this, head and shoulders, cup and handle, all the bearishness I had here, it did not break down yet. That doesn't mean it can't, right? Even on this Bitcoin chart, like we could see easily another shoulder on this thing. We could just make 3 or 4 more shoulders. Like, it doesn't matter. At that point, it turns into like a descending triangle. But
yeah.
As long as we don't make a higher high here, it's still bearish. Like, every day it's bearish. Yep. Has it changed? Nope. Still bearish. Like, nothing changes there. And for me, the same thing with DXY until it's back above 106. The assumption for me is this will eventually, maybe not in my lifetime, but eventually this should break down. This should break down eventually. It's just
grandkids will love it.
You just can't front run that, And I don't know enough about the debt ceiling stuff and all the other macro things that are going on right now to like try to even game theory out why the DXY is pumping like this. But it's definitely hurting crypto. It's hurting gold, especially, which hit a massive brick wall at like 2050, and now it's looking kind of divvy up here, bear divvy. You got higher highs and less momentum. So that's really all I'm seeing. And then ETH, last thing I'll just mention, I think ETH needs like 10x the staking and like 30x the fee burn, and then maybe it might go up. But right now it's like, I don't know. Like there's there's what, BlockFi, Celsius, FTX. There's all this staked ETH flying around. There's all this, by staked ETH, I mean like Steth. Celsius has like 800 billion in ETH or something. Like, is that going to get distributed to the holders of, I don't know how any of that's actually going to work. Everybody's so worried about like Mt. Gox distributing Bitcoin, but what about Celsius and BlockFi distributing like 1.2 billion in shitcoins, right? Like, I think that's going to have an effect too. So watch out for that. That's all I got.
As a side note too, have you guys tried to send an actual Ether transaction, not from an exchange, but from a wallet?
Not
Not in a while.
recently.
Dude,
Not all the time.
gas fees are so stupid. They're like $130.
What?
Yes,
Okay.
they're so high. The only reason why I even know is because I was trying to set up like a digital identity. Doing that like that service where you can get digital residency and
Oh, right.
some small island nation that is like, yeah, we'll take it. But one of the payment methods was ERC 20 tokens, and I was trying to do an Ether transaction. I was like, what the fuck?
Mm-hmm.
Like $100, and I was like, okay, I'll just wait a day. No, dude, it's been like between $75 and $120 for the last 2 weeks. I'm like, who's
But that's
going to
good.
use
Look,
this?
the bottom line is fees are good for both Bitcoin and ETH. If you're a holder, if you're a miner, if you're a staker, fees are amazing. If you're a user, it's terrible, right?
Yeah, it's
Wow,
ass.
yeah.
High fees are really good.
Like,
For,
let me go pay for this cup of coffee.
Bitcoin.
$3, 120 is in fees.
Well, this is the quandary. Do we push low transactions, microtransactions to layer 2? Like, is that okay? Do we push them to layer 3 once they're high in layer 2? Like, eventually the buck has to stop somewhere, where somebody's paying for security and somebody's paying for transaction fees. So, I mean, we're seeing that play out now with Lightning and the other ETH layer 2 stuff. Like, if you look at the on-chain activity for ETH, it is abysmal relative to where it was 1 or 2 years ago. And to me, that's because of staking and because of layer 2s. Like, it's just cheaper to use a layer 2, right? So
Yeah.
why
Yeah,
would
there's been a bunch of meme stuff going on too, like Vulcanut and chat said the Pepe, and I don't know. I think there's 1 or 2 others. So that may have like kind of short term spiked the fees. I don't know if they should go back down though. I would think.
Yeah, it was because of how do you say this politely? Shit coinification.
Yeah.
Unregulated casino gambling. All right, I'll shut up. I'll let the Schmitty talk.
What do you got there? You got a little S&P
Well, the
500?
S&P is it a cup and handle? Is it a diamond top? Is it all because of AI? Is it a debt ceiling hype? I don't know. I don't know.
Who knows? Who the hell knows?
All right, let me share this with you guys so you can see it in real time and not have a delay. You see that?
Yeah.
Okay, cool. So I'll piggyback off of what Josh was talking about with Dixie. To put things into perspective, this thing moves incredibly slow. Okay. This level that we've been bouncing off of was established probably before half this chat was even born. It was back in the late 80s, right around the time I was born. And it's been heavily respected throughout the entirety of this 40-year span of prices or price activity. We can see like things like this where the market comes up, it looks like it's about to blast through and then it gets rejected, looks like it's going to blast through and gets rejected, and eventually gets through. Like, this happens often. It even was the upper boundary of a decade-long range. So the fact that we're bouncing here isn't surprising to me. Now, the amount it bounces and the length of time it bounces, who knows? But the last time we did the market power hour, I remember maybe it was 2 times ago. I was kind of bumming you guys out, talking like this thing could just bounce forever, and until this thing gets done bouncing, it's generally not a good idea to front run breaking of support. And just like it's also not a generally good idea to front run breaking of resistance if you're, buying anti-dollar type stuff. Until this thing closes down below this little zone, like the 101.8 area, somewhere down here. This, in my opinion, is not going to give Bitcoin or really much of anything else from gold to equities the handshake to say, yeah, time to rally. This is a point of uncertainty, and until this thing breaks down, we're going to see continued chop. So these are monthly candles, right? If you look at weekly candles, these bounces, although small in percentage change, top to bottom, it's only 5%. This can yield massive outsized reactions from crypto. So even though these things aren't very big bounces, the reaction to those bounces can dwarf them. What were you gonna say? Someone was talking.
Oh no, I don't think so.
Oh, that was weird. Okay.
Now you're just hearing the other voices in your head.
Oh yeah, it's just myself. Sorry.
Well
So,
done.
I mean, and when we look at trend, like applying the real cloud settings to Dixie,
Wait a minute.
Oh, wait, hold on. Sorry.
we see. I mean, it's a very clear downtrend. It doesn't get much cleaner than this. We see the price through the. Damn it! We see the price through the cloud. We see Kijun finally through the cloud. We got this red Kumo. All this stuff. This says bearishness. But the thing that we definitely don't want to see when we're looking at quote unquote strong trends or trending markets is we don't really want to see. Get this price out of here. We don't really want to see. We don't want to see a flat Tenkan with an aggressively trending Kijun. That tends to yield things like TK crosses, like here, and that is usually a canary in the coal mine for short to mid-term reversals. So maybe something that bounces and then continues downward or whatever. So until this thing starts trending again, where we see the Tenkan moving in tandem with Kijun, it's starting to do it a little bit, but until it really starts dropping, I don't really see the dollar, dying like everyone hopes it's going to. And when we take that mindset into account and we go over to something like Bitcoin, we see exactly like Jack said, 60 days of sideways, because the dollar's had 60 days of sideways as well. It's just flip it upside down. It's the upside down world over here. So, in my opinion, I don't see the reason to assume this is going to break, and so the default assumption is it's going to bounce. The question is just how high is it going to bounce? And similarly, on Bitcoin, it's not a question of is it going to drop? It's a question of how low is it going to drop when it does. So we can start to look at like downside targets, right? Josh provided some really good ones based on cloud metrics. There's some other ways that we can calculate targets, based on head and shoulders and stuff. But in my mind, the most important and most crucial trademark level is this zone of prices outlined in red, which is 24.5 to 25.2. This, in my mind, is a huge line in the sand. If this thing snaps, well, then we must go deeper, right? But until that does, this should be the default assumption, right? Just like I was saying on Dixie, we don't assume things are just going to break because maybe it will, maybe it won't, but it'll bounce and bounce. The default assumption shouldn't be that support is going to break. So playing long spot entries here, this seems highly appropriate to me. And of course, if it breaks, then you manage your risk accordingly. You get out somewhere down here on closes that are deeper. But to me, like this seems like a very logical zone. And we can calculate that based on like really, really simple stuff, like just doing this symmetrical triangle that played out, which is, you can look at this as a head and shoulders. It's going to have the same target. It's just kind of, just a different way of looking at it. But there's a very clean symmetrical triangle here, lower boundary here, upper boundary here, converged, broke down, had a throwback, and now it's going down. But the target of that is we just take the lower boundary, project it to the upper, we get 3,500, and then we go boom, go down, and what do you know? $3,500 target is right here, smack dab in the middle. The question is, are you going to be a buyer when the sky falls and you think that this thing's going to shit right through this? Typically, when things do reverse, you don't want to be a buyer because you're scared. Here, for example, the sky is falling, then it reverses. So you got to manage your risk accordingly when it comes time to actually be a buyer, or maybe you're a first time buyer, maybe you're averaging into a longer term position. When we look at things like weekly trend, it is objectively bullish by some metrics. We have the 50 and 200 EMA, which tends to be like the gold standard of EMAs and trend and stuff like that. But we had a God, I don't have my glasses on. I don't know if you guys can see this or if it's actually just this blurry, but get rid of the drawing. We had a death cross and then a recross. So things are looking up, as long as we're sitting above this 50 and 200 EMA. This is kind of like, I look at the 200 EMA like, you're in the ocean. This is the water line. As long as your head's above that, you're breathing, and below that, you're drowning. So as long as the market is sitting above the 200 EMA, like, this is good. Like, this seems fine. It's just boring. What's up?
I said we'll take it.
Yeah, exactly. And a retest down into that zone that I described, the 24.3. That's right in line with a retest of the weekly 200. For other metrics, I love using B bands. Typical throwbacks during trends are to the midline. Again, right in line with this zone here. So
it's almost like all the TAs using the same left side of the chart.
Yeah.
Just to find the numbers.
Yeah. So lots of ways to invalidate things is kind of just pick your flavor, right? But it all says the same thing, right? Closing down below here on a daily/weekly basis, in my mind, means we're going deeper. We're going to deeper liquidity. If you're looking at B bands, that means we're going to the lower B band. If you're looking at just levels, that means we're taking out liquidity, which is down here. Or even if you look at standard cloud settings, that'd be like maybe a reset to the Kijun, maybe a retest of the cloud, lower boundary. But when we're playing weekly timeframes, we want to be looking at closes. So I know weeks seems like an eternity in crypto, but look what happened here, right? There was a big shakeout, and look how it closed, and look where it retested. It retested this weekly midline on the B bands. So all that to say, there's a lot of cushion for the push and below us, and
Band.
And
got him. Well, I think if you're bearish, if you're like turbo bearish, you want to see us below 24 on a weekly close, right?
100%.
Because that breaks like all the EMAs, all the levels, all the horizontal levels. If you want this thing to zero, you want to see us below that weekly, that SVB weekly candle at like 20, below 20, and there goes the psychological level.
And you want open interest to spike too, which I haven't really seen lately.
Yeah, and so the other thing to take into account too is that in general, a really good metric to kind of gauge whether a market is bullish or bearish, like exactly what Josh was saying, like if we're like turbo bearish or turbo bullish, like well, what does that mean, right? One really good way to gauge that is we look at targets of bearish patterns, and if they underperform them, that is a good sign that we are in a stronger bull trend than you might think, right? So if we take the target for this head and shoulders, which is 43, and we project it from the neckline, the target is way down here, right? This is just rough and dirty target. If we find support here, this is a really, really good check in the turbo bull column. And we should be looking for things like this. Now, however, if we close below this zone that I was describing, that unfortunately would look like a head and shoulders bottom failure. So here's your shoulder, head, shoulder. Here was our breakout. Now we're hitting this, what we would assume to be is a throwback to the neckline, a perfect throwback here and then rally. That's what we want to see, right? But if this thing starts closing down here, that is a failure of a breakout. And typically, we don't see this sort of thing on high time frames. It's not as common. But if we look at like hourly, 4-hour, maybe even daily sometimes, whenever we make patterns like this, head and shoulders bottoms, if they break out and then they reverse, they very commonly hunt for the head. So that would be That would be a real nail biter if we broke below this, because next line of liquidity is here, and you better hope to God that this supports. And if this doesn't hold, well, then it's going for the head. And I don't.
And then what?
Yeah. Well, so
Price discovery.
yeah. And then what? So for me, the next logical level is right below on the monthly. So monthly, like this is even though I literally just said don't assume the neckline breaks, but in parentheses have it planned in case you're wrong.
Right.
The next line, like the really, really big generational buy opportunity in my mind is this 14.1. This is an untapped breakout level. This was respected for years. We broke clean through it. We never retested it. So if for whatever reason all hell breaks loose and we do just nuke to the depths of hell, this is the floor of hell in my mind. And so this is a really, really great buying opportunity. But again, that's all pending this zone right here, right? We want to see how well this holds, and if it closes down below, then being macro long just doesn't seem appropriate to me. Now, vice versa. Let's say it just never pulls down, right? Exactly like Josh said, this is the zone. This is the level to beat. If we, for whatever reason, rally up here, bam, all this stuff's invalidated. Get rid of your head and shoulders. That's probably not going to play out. It already had its breakdown and it came back up. Well, that's a head and shoulders failure, right? Just like I was talking about with the head and shoulders bottom failure. Well, we could have a head and shoulders top failure as well. And of course, we would hunt the head for liquidity and the right shoulder. So, long story short, if that's even possible with me, long story short is this zone right here is really important. This is the level or zone of prices that forms the neckline of this head and shoulders. This was our price floor for the last 2 months. Right now, currently finding resistance on it. So for me, this says confirmed resistance, go deeper to next level. But if we start closing back above here on dailies, keep an eye out for this. It's still, in my mind, no trade zone in here. Anything in this band of price, is here. It's kind of like no trade zone because it's like who knows what's going to happen. It's going to come up, maybe it comes down. You're just going to get chopped to death. But if we clear this zone, boom, and we make it to the promised land up here. Well,
risk on.
Yeah, risk on. And then we look to things like Josh's doubled settings on his Ichimoku cloud, and it says trend up, trends up. And by then, ultimately, we'd have weekly consolidation. Like we're starting to squeeze on B band weekly B bands. Hopefully by then this will be properly squeezed and consolidated, and we'll give birth to a brand new baby boy, and we'll have good times leading into the end of the year.
Beautiful masculine baby boy.
Yeah.
The good thing about these setups like this is like, yeah, it's brutal to actually sit through it, but the levels at which like I have confidence in, generally the market has confidence in direction is like very clear, right? Like there's horizontals. There's no like wishy-washy about it. Like these are the levels. Even I'm looking at like the S&P right now, and if it breaks 4,200, like man, this thing can really take off because that's been the level since like last year. You know, it's just crazy that we're at all these horizontal levels in different fashions and on all these markets.
Yes. Yep. So we were talking about this before this, or I was anyway, but before the stream, and in my mind, the really exciting things are taking place on equities. You know, they're not immediately exciting. It's not like you're getting 100x in like 5 seconds like you do on like Pepe coin or whatever the fuck it is. But when you're looking at like building and allocating things on long-term retirement, 401k, whatever your portfolio looks like, this stuff looks really good. Like this has this, all the seeds are planted for potential multi-year growth, surprisingly, in equities, which will then give market confidence to more speculative assets like Bitcoin and like it's kind of those like one of those rising tides type things. If equities goes up, well then people will look to have more risk. They'll risk on in other parts of their portfolio, and then everything like money will start coming back into crypto. So it seems really funny that like this is taking
Well, as
place.
bullish as we are, as bearish as we are on Bitcoin, like I think we're all equally as bullish on the S&P.
Yes. Yeah.
For
Yeah.
the
I mean,
exact same reason. Like this is a chart pattern. It's a multi-headed head and shoulders, loosely to me, and it's at a key horizontal level again, right?
yeah,
So,
right
Right.
as Dixie is bouncing on its thing like this, we're doing the opposite on S&P, and this thing can only hold so many times. It's retested it. If we're looking at the weekly, 1, 2, 3, 4, 5, 6. How many times can this thing really reject this level? You know, so it's once this thing snaps, looking at the real trend metrics on cloud, like we're almost on a cloud breakout on a weekly time frame. We're looking at Bollinger Bands. We're very tightly consolidated. We're in the upper half. This thing's just ready to run. Like it has all of the early warning signs. Not quite,
Yeah.
but
and you can even say like look at Nasdaq, look at Nvidia, like look at components of the Nasdaq or whatever, and they
Yeah.
all are basically a fractal that's further down the line of what the S&P
Yeah,
is.
yeah.
You know,
Good
now.
call.
So
yeah. So anyway, long story short,
well, somebody says in the chat, and they're right. EJAMS, the Fed or the S&P hasn't bottomed until after the Fed pivots, and that's the weird part. Like logically, this doesn't necessarily make sense. Like the Fed's still raising, they're still hawkish. They're talking about raising more. Like the next meeting isn't until a month from now. The debt ceiling, like all this stuff is going on to me that is bearish for the S&P, but the S&P's like, whatever.
We've even seen bear markets bottom after they stop, raising. Like once they say, hey, we're just going to hold here, like, okay, then the market sells off for a year and then we bottom. So how we mesh all that together, I don't know. EJAMS, I would just say, be careful saying, well, it's got to do this thing before I'm okay with it going up or down or whatever.
This time is different, bro. Okay.
Well, yeah.
But it looks
Right.
really good. Like I wouldn't want to be short the S&P, just like I wouldn't want to
No.
be turbo long BTC right now. But that's just the TA person in me.
You wouldn't have a 50x long open right now?
I don't,
you wouldn't have
I'm
happened
not
to open a 50x long yesterday.
at the bottom. I did not. That's all we got. I think we gotta leave it there. But you guys got anything else?
I think we're out. I have one last thing.
Yeah.
Keep your eye on Litecoin. Litecoin is actually
Oh,
closer to its yearly high than Bitcoin is. So it's just kind of funny. The Litecoin halving is 70 days away. Historically, this hasn't been some kind of like great buy or sell signal. It's been, in fact, I think the last time there was a halving, it went down like 50%.
I have
maybe
a great
more.
chart on that, by the way.
Okay, tweet it
Litecoin's
out. I'll
halvings
retweet it.
have been abysmally bad.
Okay. And so, maybe we have the same thing 2 months from now, but I mean, I for one would love to see some kind of impulse up, get everybody nice and horny, and then, rug literally everyone. I just feel like right now, the sentiment wise and the people on Twitter and stuff, nobody's expecting up. Everyone's like, oh yeah, sideways / down. So I don't know. It just feels like there's got to be that one thing that just gets everyone nice and horned up for the wrong thing, and then and then rugged. Know what I'm saying?
I do know what you're saying. All right, so that brings us to the end of our market power hour. Any closing thoughts or words of inspiration for those in this trying times?
Not really. Just
don't die. Survive. Stay alive for 25.
Manage your risk appropriately, and that includes which hardware wallet you're using.
Yeah. The one thing I'll say is, guys, well, for those of us in the northern hemisphere, it's springtime. Stop looking at charts. Go touch some grass. This thing isn't doing anything. Like, keep it simple. Don't put 1,000 indicators in your chart. Look at points of invalidation. Look at points of confirming your thesis, and go touch some grass.
And use doubled cloud settings. That's like Schmitty's always telling you guys.
So like I was saying, use single cloud settings. And yeah. All right. So we'll go and wrap it up here. Again, so not next week, but the next week, 2 weeks from now, it'll be on Jack's stream. Hopefully the market will do something by then.
Oh my God, please.
If not, then we'll just say the same thing we did to you today. And I'll post the recording of this on YouTube, and yeah, we're all gonna make it, guys.
Hang in there.
Sounds good. Thanks, everybody.
All right, see you guys.
Thanks. Bye.